Hey everybody, hope everyone's doing well and had a good day today. In this video, I will review the Emini 5-minute chart from Wednesday, June 4th, 2025, with a focus on breakouts and second legs. Going into the day, we had a trading range at the end of the prior day and a gap up going into the day above the trading range to the left, and the market accepted the gap, meaning we had a gap up and then we had a bull trend bar and follow through. Good for the bulls, probably will get a second leg up, but one problem is we are testing a measured move target of the trading range to the left, and it looks like the market is respecting it, paying attention to it. We test this resistance level and we're unable to break out above it. We tested it on bar 2 and 3, but reversal on 3. If you think about the gap up as simply a bull trend bar, then we have a 4 or 5 bar bull micro channel up to bar 2. First reversal down will likely be minor. The bears need at least a micro double top, so probably buyers below 2, which there were, but brief second leg on bar 4 for the bulls. Gap up and follow through, pull back, brief second leg by the closed bulls, 1 and 2, disappointed 3, exit on 4, and we get this reversal down. Lots of overlap on the open. The first 5 or 6 bars, mostly sideways, big up, big down, and look at this bear breakout. Okay bar on bar 5, but unable to break out and close below the prior bars, lower tail, and then 6, big bar, but big tails, 7, another big bar, but small body, big tails. And bar 8 was different than the prior bars. 6 was okay in this aspect as well, and that is the amount of overlap, or the lack of overlap, with the prior bars. Notice how much of bar 5 is overlapping the prior bars, probably 80% of the bar. Bar 6 is better, maybe only a third of the bar is overlapping, maybe a little more. Bar 7, almost an inside bar, so largely overlapping the prior bar, but bar 8 broke out a far distance below the prior bar. And because of that, that distance is strong for the bears. We also have, if this is a micro channel from bar 3 to bar 8, maybe a 6 bar micro channel, good for the bears. First reversal up probably will be minor, and the bears will likely get a second leg down. Bar 8, the distance is good, but the location is bad. We're testing support, the bottom of a trading range from yesterday. And with the gap up, bar 80 to bar 2, this breakout, again, if you imagine the gap is simply a breakout bar, this breakout is big enough and went far enough for a second leg up. And this might simply be a deep pullback after this breakout. Looks like a trading range, big up, big down, big confusion. Now we're back in the buy zone, and then we get 9 and 10. Decent reversal and follow through for the bulls, second leg up likely. We paused and got a second leg on 12, but this is all a micro channel. This is a simple leg from the low of bar 8 to bar 13. There were no pullbacks, so every bar was at or above the low of the prior bar. And now we have a micro channel up, so big down, big up, big confusion, trading range, price action likely to follow because both sides need a second leg. The bears will probably get a second leg after a deep pullback. And the bulls will also probably get a second leg up, but after a deep pullback. Here, maybe about a 50% pullback of the rally and then a second leg up. But here, 18 through 20, bull breakout, but possibly leg 3. We went up on 7. Doesn't matter that we pulled back below 7, then rallied to 13, leg 2, pull back, leg 3, and a double top. We're testing resistance, so an area where there were sellers before. So are bulls eager to buy here? Last time we were here, we sold off for many points. We tested again, sell off, tested again, and reverse again. And this breakout for the bears is relatively strong. 3, 4, 5 bar micro channel. It's orderly. The bars themselves are not all that strong, but there's time control and it's not climactic. Plus the context is good. The bears still probably will get a second leg down after this. We have a big two-legged correction. This is a big low 2 short. It's a low 2 here, low 1, low 2, and then here, low 1, low 2. Leg 1 for the bears, high probability of a second leg down. So bear breakout, pullback, second leg down, 27. Inside bar, really weak buy for the bulls. We're still at resistance, the upper third of a trading range, and a tight bear channel. Bulls need a double bottom. And bulls who bought here, 26, trapped on the outside down bar, 27, using the rally 28-29 to exit longs, and the bears are getting short for a third leg down. But now we have 1, 2, 3 legs down to bar 33, breakout of a channel line, but we're also testing the gap. This is support in the bottom of the trading range from yesterday, plus the bottom of this bear breakout. Traders who sold during the tail of bar 8 got trapped on the reversal up, and that creates support. So the midpoint of this tail, or even below it, is probably going to be support. And we can see 33, 3 legs down, testing support. Closed below the midpoint of the tail in the gap, but immediately reversed up. Big down, big up. Obviously, trading range price action throughout the day. It's probably a trading range day. So is this going to be a bear trend that continues for the rest of the day? Probably not. We have 3 legs down, 2 support, and overall trading range. And then here, big down, big up. Trading range price action, likely 36, 37, 38, IOI, breakout mode pattern, at support in a trading range, and then 39, 40, strong breakout and follow through. Now we have 4 bars up, 39, 40, very strong bull bars, uniform in size, crossing the moving average, closing on their highs. Second leg up is likely. We paused on 41, 42, and we're getting a second leg up, 43, 44, another strong breakout and follow through. Probably buyers below. Second leg up, likely, still nothing to sell. This is a spike from the low of 37 to 45. There's no pullback along the way. So even though you can count 1 or 1, pause, 2, this might be leg 2 or leg 3, depending on how you look at it. It's a tight enough channel that it's a breakout on a higher time frame. First reversal is probably going to be minor and then lead to trend resumption, which is what we got here. High 1, pullback, high 2, pullback, high 3, 51. You can call it a wedge bull flag, double bottom, 46, 49, failed breakout of a double bottom, so functionally a wedge, 3 pushes down, 1, 2, 3. 51, a stop order, buy for resumption up, but location, upside might be limited. 1, pullback, 2, pullback, 3 pushes up to resistance. We're back at the highs of the day, where each time the market tests this area, and I'm using the high close of bar 4 for this resistance line, every time we get here, we sell off and reverse. And now we have maybe a leg 3 or leg 4 in a wedge double top at resistance. So probably going to find sellers here. Bulls who were trapped earlier in the day here, they use a very wide stop and do not panic. They scale in, and they are forgiven for buying high in a trading range. They scale in lower. They can make money on their lower buys and break even on their original buys. 56 outside down, 57 follow through. For the bears, It's 3 or 4 legs up at the top of a trading range, a big double top, and an outside bar trapping bulls. Traders who bought above 55 trapped into a losing position and follow through. Now there's a weak high one, 58, sellers above, second leg down, likely the bears get there. 1, pullback. 2, pullback, 3 legs down, and we channel down for a fourth leg on 68. We're testing support, so we have 3 or 4 legs down to this gap, the bar 42 high. 43 created a gap, a space between the high of 42 and the low of 44, which then was the low of 51. Space between these bars is a gap. If you sold above 42 and got trapped on 43, the market never came back to your entry price, and bears give up on their shorts. They buy back shorts, look to sell higher. So we're testing an area of support where traders were trapped on leg 3 or 4. So probably going to bounce here at least. But where's the credible stop order buy? Maybe this rally is a tight channel. We get a 50% pullback and then test the highs again. But there's really nowhere to buy here. The bears are controlling price in a tight channel. Every bar mostly or completely below the moving average. Really no credible stop order buy here, no trend line break. And always in bears, maybe they exit above a second reversal, maybe above 70 or 72, but also reasonable to sell again below 73. And this tight channel had a pullback and then a bigger second leg down. It could also be a second leg down from here. Tight channel, deep pullback, second leg down. Or 3 legs down, trading range, market cycle resets, leg 1, 75, pullback, leg 2 down to 79, and we're back at the bottom of the trading range. So probably buyers here, bears looking to take profits, bulls will start looking to buy, but tight channel, really no reason to buy yet. For day structure today, I saw today as a horizontal trading range day, which is very clear. And you could also draw from the highs. We had a contracting triangle with lower highs and higher lows. But for the most part, pretty much a horizontal day with swings up and down. And we can see 2-legged patterns up and down in both directions. All right, that's going to be it for today's review. Thanks everybody for watching, and I hope everyone has a good night.